Welcome to another episode. In this episode, we'll be looking at the recent trends in gold as why it is so much increasing when compared to other assets. So that's what we are going to look at in this episode. Let's look at why the gold rate is increasing. First, let's compare with gold with other assets. Generally, when there is investment happens, an ongoing process, it is compared with the stock market with the gold. So gold and equity market returns are inversely proportional. So equity market in the sense to the industry. When the economy is doing well, naturally the investment will find its way into the equity market or rather into the industry rather than gold because the investment is fetching good returns in the stock market or industry, then people will hesitate to invest on gold, which is almost a dead asset. So naturally, it will go. The money will get into pumped into the equity market rather than gold. But whereas on the other hand, when the market is not good, a kind of a pandemic situation or a war situation, then money might not go into the industry. It will get into the gold where it will have. So it's a kind of a safe bet. Gold is considered as a safe bet. So that's what in the first point is all about. If equity delivers good positive returns, gold prices are muted. Muted in meaning it doesn't go up. It is muted. It start may even start decreasing and vice versa. So at present, whereas as far as India is concerned, the stock market and the gold prices are at all-time high. If you during the time of recording this, the stock market is about the Sensex is about 74,000, and even the gold prices is at the best. If compare in INR terms, per gram of 22 karat gold is around 6,500. So both are all-time high, and that is generally a rarity, but it is happening at this point of time. And there are reasons for it. We look at it. And if you look at the didn't happen till up to 2018. 2012 to 2018 was static. There was not much of increase in the gold. We'll see the chart as well. But again, COVID time it increased because people didn't have much weight on industry because the industry was all business was all particularly which is running on brick and mortar. Physical presence was not required. Everything was moving to online, and that's where people were hesitant to invest more money in the stock market rather than they turned up to gold. So it started going up during the pandemic time particularly, and then once pandemic got over, it hit a low point at 2012 22, and then there were other factors like Ukraine Russia war which played an important role. So over the last 2 decades, if you look at it, it has given a good return of 11%, which is better than any assets. Because if you look at the bank interest in India, it's around 6% plus. It can go up to max of 7 to 7.5. I'm talking about last 1 decade. Max of 7%, and mutual funds returns could be about 12%. But then there are market situation on 1 year, it can go negative. 1 year it could be positive. On an average for 5 year or 7 year period, it could be 12%. So gold was comparatively in that range of 11% in the last 2 decades. That's a good sign as far as gold is concerned. However, the last point, if you look at it, we look at the chart, 2012 to 2018, it was static. There was not much increase in the gold price. This chart provides you with the details in the last 44 years. So starting with the 1980 to till now, that is 2024, how it has gone. 1980, the gold per gram was 180 rupees, and now it's about per gram gold is about 6,000. That is in 2024, it's about 6,500. So particularly if you look at 2012, it is somewhere here middle. Um, it's about 3,000 until up to 2018 is what it was. It went down. That is 14, 15 and all. It went down. It's about 2,000 or 2,600 or 700. And 2018 it came to again 3,000. But 2020, if you look at it, it's about 4,900. The reason was the pandemic. The pandemic, naturally, everything was shut down. The industries, business was all shut down, which was new business model like online was, it was moving to that. And that's where gold was favored. 2020, 2021, it was all favored. And 2022, it again brought it down. It was about 4,000. 2021 it was about 5,200 per gram, and 2022 it was 4,800. And if you look at the reason, it was the Ukraine-Russia war plus inflation, which made it fall. I mean, gold fell down, and again it has 2023 onwards, it has gone up. Now let us look at some of the reason. Of course, I had made it a primary reason, and what are the other secondary reason. The primary reason as why it is increasing is because the worst inflation in US in the last 2 decades. This was triggered by COVID, because during COVID time, there are a lot of liquidity or money was pumped into the market, and free currency or currency was provided to the citizens so that they can go and make their living, because most of the businesses was closed. And so the government provided liquidity. This is be it US, UK, they provided with funds, and that triggered the worst inflation in US. And there's no more money in US. Inflation happens when there is more money and fewer goods are being procured. Naturally, it causes the inflation. So one was the worst inflation, and when about inflation was to die down, then the Ukraine-Russia war started around 2022 is what the Russia war, which was never expected for that. So this triggered Ukraine-Russia war triggered one more thing, that was recession fears and job market. That is post-COVID, the job market started off booming. People were returning to office, and the Ukraine-Russia war started, and there is huge chunk of layoffs which started happening across US or across the globe. It had happened. So this triggered the recession fears. Ukraine-Russia war has not come to an end, and China is doing not doing that great. One of the factors, yes, we'll see China is pumping in money into the gold. It is buying gold, because of which there is demand for gold. But that is all secondary. The primary is, of course, the Ukraine-Russia war, recession fears, job market, which means your stock, the industry, favorable situation for industry was not there. So naturally, money was flowing into the gold. So gold was made as the safe bet. So these three, I would say, the primary reasons. So there are secondary reasons. So this is the primary reason. Secondary reason, if you look at it, fall in dollar index, relationship between the price of gold in India versus US dollar index is often inverse, meaning one goes up, the other goes down, and vice versa. Gold again is always linked to the US dollars. Therefore, when US dollars strengthen against other currency, the price of the gold tends to decrease in dollar terms. Conversely, when US dollars weakens, the price of the gold tend to increase. So if you look at it, even in India, yes, it's around INR is around 80, but it is there for almost 4 or 5 years. It's around that range. There is not a drastic fall in the US dollars. It is almost last for 3 4 years. It is almost stable or weakened. So that's where that is trying to increase the gold prices. So dollar not doing that great, because again, why not doing great? Again, if you go back, the inflations in US, that is causing issues. Rate cuts. So when it is there are going to be rate cut, that means particularly when interest is going to be down. Um, so if you look at it, gold typically inverse of relationship. When interests are low, the opportunity cost of holding gold decreases, leading to increased demand and higher prices. So when interest rates goes down, and when interest rate um, goes up, it is converse. So there is a rate cut. I mean, not just in US, even in India. After COVID, they started the interest rate went down. It is slightly now coming. It is, I mean, inter COVID time it was less, and then they started increasing, and then it is now after 7%. It is now coming down bank interest rate. So naturally, the gold price might tend to go. This is all secondary, the interest rate and all, but primary, as I said, the inflation, COVID, and all triggered it. Number three is, of course, China's demand. Gold demand in China on the recent time, because more and more industry is moving post COVID. More and more Western industry, Western based headquarters industry are trying to move out from China. So thereby, even China's economy is not that great, and substantially, that is where they want to keep the money safe, and they are, um, uh, I mean, they are now investing more and more on gold, and new trend emerged in China where gold buying has become popular among even young Chinese, just like India, where over the period of time, Indian household always try to invest in gold. That has now been catching up in China as well. That is where, if you look at it, the gold demand is increasing, the prices are increasing. But finally, whether the gold will is going to be stable or it is going to come down, as I said, there are multiple factors. It all depends on how the world market, how the world economy, how the Ukraine-Russia war, whether it comes to an end, whether investors, once they have confidence in the world market, naturally from gold, it will get into the industry. But for now, it can get stable, but prices falling down on gold looks remote. It will fluctuate 200 rupees, 300. The fluctuation is possible, but drastic fall in gold is very remote. So that's about today's presentation. And if you're not subscribed to my channel, do subscribe to my channel. Thank you and cheers.